It's Ralph Silva, Director and Analyst at Silva Research Network. Ralph, we're just going through some of the numbers. Your first reaction, better than expected in terms of net income, and they're only cutting 5,000 jobs compared to the 10,000 we were expecting.
Sure, and 5,000 jobs, to be honest with you, I think they have 325,000 people working for them is not a lot, and they can probably do a lot of that through attrition, so it's great. But fair warning here. HSBC is not representative of the entire British banking business. HSBC gets...
Because it's doing better.
Not just because it's doing better, because it's more globally diversified than any of the British banks. So a lot of the revenues that they're getting in the investment banking area, as an example, are coming out of Asia, which a company like RBS and Barclays simply don't have the infrastructures that HSBC does. So it's great for HSBC, it's phenomenal for HSBC, but it's not representative of the industry in the UK.
Ralph, in terms of what the share price is doing, it's actually gaining some 2.8% in London trading. Overall, were you expecting 10,000 jobs to go?
I was expecting there was going to be some job losses, but not because of the economy or because of their position. It's because banking overall over the past 5 years has invested so much in technology that they just simply don't need that many people. So in the UK, we're going to see up to 40,000 people lose their job in this country alone, and that's simply because of the evolution of technology.
So 5,000, what does it mean? That we're going to have other job cuts on the card? Are we still aiming for that 10,000 over the next couple of quarters?
HSBC will reduce their numbers. They have to reduce their numbers. They have 325,000 people working for around there, and that's just simply too much. But the other banks in Britain are probably have more people than they absolutely need. So overall, we're going to lose jobs in the banking industry, not necessarily just with HSBC.
Now, at the end of the week, we're also expecting figures from RBS and also Lloyds. Will they disappoint compared to these ones?
I think, well, they will absolutely disappoint compared to these, simply because their cost of capital is so much higher than HSBC's cost of capital. So Lloyds going out there and getting money is costing them an absolute fortune. And because they're so retail-oriented and because the mortgage business is so depressed, I expect Lloyds especially to be completely disappointing for the entire
So do RBS and Lloyds actually have to change their business model some sort?
I think they do, but I don't think they can, simply because they're so heavily owned by the government. The government's not going to allow them to do that. But there's also another issue here, is how much are they lending to small to medium-sized businesses? HSBC is not going to be a victim of political infighting over this, because simply they have always done quite a bit of this. But the other British banks aren't, so I think they're much bigger risk.
Ralph, how do these European banks actually stock up with US banks? Because it's really investment, it's the investment bank that's struggling the most.
It is, but there's a direct correlation between the revenues and how much they're making and the economy. So I think if the European economy progresses faster than the US, then the banks will do a lot better than the US. This is very unlike 10 years ago, where there wasn't a direct correlation, but now if the economy is doing well, the banks are doing well. And that's why many of the banks are missing expectations, because when they created the expectations, they expected a 2% rise in the economy. We just didn't get that.
Ralph, we just got another headline I want to bring to you, targeting $2.5 to $3.5 billion of cost savings by 2013. That's quite a figure.
Yes, they've overly invested. HSBC knows they overly invested in the U.S. They got hurt mostly in the U.S. They need to reduce their assets in the U.S. The 200 branches or so that they're selling is just the start. I expect them to sell even more assets in the U.S. They're becoming a far more effective and efficient bank, and that means less debt in the U.S.
Yeah, the latest headline also, HSBC saying that it remains positive on the outlook for emerging markets, but we're seeing a lot of the emerging market banks actually struggling.
Yes, when you say emerging markets, we always like to call them all. They're not all doing great. Russia's doing great, Brazil's doing great, India's doing great. So there's certain emerging markets that are phenomenal. And HSBC, out of good fortune or something, happen to be in those countries that are doing very well.
Ralph, we have 20 seconds left. Again, latest headline, HSBC saying that US and European growth to say sluggish. That's going to hurt banks, what, over the next year and a half at least?
At the very least, it's going to hurt the number of jobs in the banking industry. It's going to hurt the amount of money that's available for small to medium-sized businesses. Overall, it's a catch-22. We're going to go in this big circle, and that's really bad.
Ralph, thank you so much for breaking those figures with us. Ralph Silva there.